back. So the week trend is again back on the screen. 11,444 is what we've got going on the Nifty for the time being. Profit taking has been the order of the day in a lot of OMC stocks. That's continued today as well. So HPCL would be a case in point. That's a stock down about 3% as we speak. And again, the auto sector, M&M, Eicher, Maruti, all of these stocks, once again, struggling. That's the shape of the day. Prashant Prabhakaran of Yes Securities is joining in. Prashant, let me ask you about auto. We did think that there was some sort of a relief rally in a stock like Eicher at some point, but then the selling has again come back. Are you looking at accumulating anything right now?
Not right now, Surbhi. As you would know that Yes Bank is also into auto loans in a large fashion, and when we have interacted with the dealers that we have tie-ups with, we realize clearly that they are overstocked and the movement of goods is not as per the expectation that they had. There is hardly any space for them to pick up inventory any longer from the manufacturers, which basically means that there is a slowdown in the market. And secondly, when you connect it back to the NBFC crisis, which practically spends around 35% of the entire funding that is done in the auto space, there is trouble that's still brewing. I think so it will be a good buy, maybe with another 10% correction that happens in the top rung counters that you have just spoken about.
Okay, just pull out V-Guard's intraday chart. There's some bit of buying happening on that. IndusInd really has been your, in the index, your stock of the day. In the broader market, of course, it's ICICI Pru, but IndusInd now crossing 1800 on that stock. It's after a long time it's done that, 1807. Just put out a 1 month chart of IndusInd Bank. It was what, 1500 when we started the month. Remember all those INFS issues, and after that 1473 was the stock. And ever since it took out that that 1550 sort of mark where the last quarter the stock struggled there. After that, just one way move on the stock. Prashant, good afternoon. Your thoughts on IndusInd Bank?
So the advantage that was there that NBFCs had over the last 3 or 4 years has clearly got passed on to the private banks and to some of the large PSU banks. Most of the NBFCs have gone and sold their books to these private banks because they are the only ones which still had liquidity along with the PSU banks. And that trend will continue till they are able to get money cheap. And that crisis doesn't seem to be abating at this point of time. NBFCs, the banks that are lending to them, are charging a premium of anywhere between 100 to 150 basis points than the previous lending rates that was there. So you are continuously going to be seeing traction in these territories. Both you have talked about IndusInd, I would talk about Kotak also in the same range, and the corporate banks, which is your Axis and ICICI. All 4 of them will benefit in a large fashion in the times to come, at least for the next 2 quarters. This growth will be continuing.
Okay. All right, Prashant, just stay on. We will get another view going now. We did catch up with Neelkant Mishra, equity strategist at Credit Suisse earlier today. Now, Neelkant says that the solution to the problem of low liquidity is rate cuts, but he doesn't see the slowdown getting rectified for the next 2 quarters. Take a look.
M3 to GDP growth, so money supply as measured by M3, has lagged GDP growth for almost 2 years now. And so for the first 1 year or so of that, the reason was that the monetary base itself, basically M0, was not large enough. But starting September, when the NBFC crisis really started to blow up, I think credit creation has slowed down. It's actually stalled. There is a problem with money creation. I think the solution to this is rate cuts. I think minor cuts may not work. Thankfully, because inflation, even though it rebounds to say 3.5% or so, there is still adequate room for rate cuts to happen. The global liquidity, there has to be a channel for it to come to India. And the first thing is that M0 growth right now, courtesy the OMOs that the RBI has done, is about 15%. So it's running well above nominal GDP growth. So I don't think M0 is a problem. The small and medium businessmen who need 100 crores, 200 crores of loans are not getting them. And this is a classic case of large organizations who have gone through a problem. So last 6-7 years, we were obsessed with the NPA problems in banks, bad loans. So till the NBFCs are not growing, and which is now, I don't think they will start growing in the next 3 months or 6 months. The bond market doesn't start to function very well, and till the time that the aggregate credit growth does not really pick up beyond nominal GDP growth, I don't think we should see a growth recovery.